Rajat Bhattacharya is with us. He's a senior investment strategist at Standard Chartered. He's joining us now. Rajat, good to have you with us here. Thank you very much for your time. How important is the CPI number out of the US? And before that, in the morning, day after here, India time, we get the RBI decision. You know, many are expecting a hold here, a hawkish hold, if there was one. What's your sense? How important is Thursday going to be to set the direction from here on?
Morning, Prashant. Yes, Thursday is an important day. I mean, as you said, not much happening this week so far. But two things on those two events that you mentioned. On CPI, we need to see numbers below 0.2% month on month. Why? Because that is the number. If US CPI constantly reports below that 0.2% month on month number for a few months, then it will go towards that. Then US overall annual CPI will go towards the 2% target that the Fed is targeting. And unless we get that number, you're probably going to see the inflation reversing back in the fourth quarter, because currently you have the base effects playing, right? So base effects is bringing down inflation. The disinflation is led a lot by base inflation. So we need to see that number. And to your point about RBI, a lot is, I mean, they are also taking cues from the global setup, right? So we have seen some emerging market central banks start to cut rates. We saw Brazil and Mexico on cutting rates, but RBI will, of course, go by Indian inflation trajectory, but a lot of that also depends on what happens in the global markets. So yeah, I mean, the hold is probably what we were likely to see until we get further signs of disinflation.
All right, Rajat, hi, good morning, and great having you on the channel. It's been such a great ride for retail investors, right? I mean, the Indian markets are up 10% already this year. The mid-cap end of the market is up 20%, and this is after so much bad news was thrown at us. Do you see more upsides, and how does an investor approach it now?
Yeah, hi, Sonia. You're absolutely right. And that basically brings to the point that we've been almost harping on for quite a while, is that the need to stay invested. This is the core thing that our core message has been all through the year. The main lesson so far this year is maintaining a broader foundation asset allocation. If you had that, you would have benefited from any rise. Obviously, there's a lot of volatility that has happened, and you know, a lot of markets and a lot of people were caught off step by this turn, the rebound, and that is particularly true for Indian assets. So staying invested is one key lesson. To your question about whether we see further rise, obviously Indian markets are stretched, and we know that. We know the valuation. We know why they are, because of healthy earnings and healthy return on equity. Indian markets are, expensive related to the global setup. But fund managers globally are waking up to the idea of a structural bull market in India, right? So, and that's because of a lot of the things that I highlighted in my last call. Indian growth story is an idiosyncratic story in the emerging market space. India is expected to grow continuously over the next decade, let's say, on a 6 to 7% clip at least. Indian earnings are delivering. So they see India as an idiosyncratic case within emerging markets, or even globally. And this is what builds the structural story for India.
Hi, Rajat. Good morning. So India, we are thumping the table as well. This decade belongs to India. Things are looking up. So it's a longer, good story. But in the near term, do you think there is a risk that money starts moving towards China, given the kind of valuations, given the kind of sound bites? Or do you maintain that, no, you continue to remain bullish on India and India's top priority?
Yeah, within Asia, China is obviously at the rock bottom, right? So the valuation is almost half of India. So if you look at a 5 to 7 year trajectory, probably investing in China, adding more to China at this stage, probably won't go wrong. But to your point about timing, and this is where we come through, China data has disappointed so far, and there's no sign that they're going to pump prime significantly. They are trying to support growth. They're trying to boost consumption. And that is probably going to we need to see more of that, especially in the property market. But there's an overhang, property sector overhang in China. So relative, the long-term story between the two, the structural story is in favoring India. But the short-term, if China delivers on some more stimulus, you could see some upside in China as well.
All right, we let you go on that note. Thanks a lot, Rajat, for stopping by and speaking to CNBC TV18. That's Standard Chartered talking about how the Indian market is a bit stretched at this point in time, but earnings are looking quite good. Let's slip into a quick break. On the other side of the break, we have our entire research team joining in to help us with the list of top 10 stocks. Stay tuned.